So the next topic that we are going to discuss is very shortly going to touch and go on this, but majorly going to talk about a lot more than just the unbanked people. We are going to talk beyond inclusion, building profitable digital banks for the next billion, also known as the emerging population. In order to conduct this session, let me first introduce to all of you our moderator, Mr. Rahul Ayyappan, the co-founder and CTO, Finacus Solutions. I request him to please join me on stage. Ladies and gentlemen, let's welcome him with a huge round of applause, the moderator for this session. And now, ladies and gentlemen, let me introduce our two speakers who are going to join me on the dais. Mr. Anubrata Biswas, the Managing Director and CEO, Airtel Payments Bank, and Mr. Ramesh Lakshminarayanan, CIO, HDFC Bank. Let's welcome both of them with a round of applause.
Yeah, hi, good afternoon, everyone. So let's start the session. Yeah. So let's start with the big question first. So to Mr. Ramesh is, what does digital banking really mean for the consumer in India today? Is it just a slick mobile banking app, or is it something deeper? For an incumbent like HDFC, what defines digital banking? Is it relevant? And why is it relevant for the current urban and rural population?
I think that's a great start. I think first of all, I mean, I'm speaking as we launch our new mobile app. So incidentally, banks are catching up, right? And then, unfortunately, that's the reality. I always say that banks lost probably 5 to 6 years of their time. And the reason for that is they've never been manufacturers of technology. They've all been, consumers or basically, buying of technology. And I think that fundamental shift has to happen. And that's very intrinsically linked to the digital bank of tomorrow. And why I'm saying is that, like I said, mobile app, net banking app, payment gateways, UPI switch, all that is done. There's nothing left out there, actually, to be honest. So what are you really staring at? Where are you going, right? So I think the fundamental difference, at least what we see where we are visiting today, and there are a lot of other strategies, digital twins and stuff like that. But I think fundamentally what we are seeing is the customer experience is now moving to where the customer is engaged. Banks cannot expect the customers to come to their websites, their assets, and hope that that they will be able to engage. Banks will have to actually go where the customers are transacting. So as an example, I'll give you a background. I mean, while we have had a phenomenal run on the digital stack over the last couple of years in terms of launching new products and stuff like that, but our hero product has been WhatsApp banking. Okay, today you can just do a fixed deposit booking in 3 clicks on WhatsApp. You can do a full year tax payment. You can file a tax on WhatsApp banking. Okay, why would you come to a mobile app and do 4 clicks and find out where that menu bar is, right? Similarly, if you look at it today, where are the other thoughts going with this? Which is what we call it as a banking as a service. I'm very, very, conscious of the terminology that I'm using out here. Take, for example, the biggest businesses that we run is in remittance business. And it's a headless API structure. We go and embed in all the bureaus across the globe. When you touch a Remitly, you touch a UAE exchange, you do a Lulu exchange, the portals there or the counters there carry an HDFC API stack, actually. And we kind of pull in we almost carry 26% market share on that today. But headless, nobody knows, because you are actually embedding where the customer is engaged in. We've been getting into corporates today. Why would somebody today who's getting promoted in a corporate fill up a form for an auto loan. I mean, can anybody tell me that? I mean, all the records are there with the corporate. Your tie-up is with the corporate for the salary account. It should be one-click auto upgrade for you. So you want a car, do a one-click and you're done. You want a home loan, all your data is already pre-transferred, curated, goes there. And it gets done, right? So I think the ways of engagement itself is things. So tomorrow's digital banks, the way we see is, banks are going, it doesn't matter whether they own the front end or they don't own the front end. But they have to get where customers are engaged. And that's pretty much what I would like to summarize at a very high level as we go into the discussion now.
Thank you, thank you. Mr. Anubrata, so how do you find digital banking evolving in India as we go along?
I think, first, I think it's a very interesting thesis which has been drawn out, which is this real concept that front ends are ubiquitous. Let me build on this by saying that the experience thesis is first and foremost in digital banking. And I want to differentiate between digital banks and omni-channel banks, which Ramesh represents incredible market share, so on and so forth. If you really look at the last 30 years, experience has broadly been compressing at a factor of 1,000 every 10 years. So you look at the branch, you look at the desktop, you look at the mobile phone, the space has been compressing at roughly a factor of 1,000. And computing power has also been growing at roughly 1,000 every 10 years. So this enablement actually has a sweet spot. And it was staggering personally to me. Sweet spot happens in countries when the smartphone penetration crosses 50%. And the number of people served by a branch becomes higher than 5,000. So more than 5,000 people per branch and more than 50% smartphone penetration. Digital banking really sort of starts scaling up. You look at Germany, early 2000s. You look at Brazil. You look at China. Digital banks as standalone entities have really started scaling up, and a sweet spot starts coming now, today, where UK, Brazil have roughly 6 to 10% of retail deposits in digital banks. India's actually at smartphone penetration of 63%, and it's very much a low per capita branch distribution, which means it fills the sweet spot in terms of needing digital banks, but it's very much a nascent category of digital banks. Airtel Payment Banks, by the way, fits that sweet spot beautifully, and that's where it's hitting scale and tipping point.
So, based on your feedback, my question to both of you is, what is the real differentiation happening today then for both of your use cases? Is it product pricing, speed, experience, trust? Where do you see the differentiation?
I think it's all of that, to be honest, but I think let's just take some use cases and see how this pans out. And like he said, see, the experiences are changing dramatically today. And I'll give a simple example today. We're one of the first banks to launch a card called Pixel Card. I don't know if any of you have seen this card in the market. It's not a plastic. It just comes on the mobile app. And it's completely digital, not built on a classical Vision Plus stack. And when we were trying to kind of sell this card, why would a Gen Z buy this card? Because the card, we have all these things. It's got different color. It's got its own billing cycle. You can choose your own reward points. Great. That's still not driving. What drove the card usage up was one Diljit Dosanjh show. We said the card can only be, if you want to go to the show, acquire the card. And we did 150,000 cards in 2 days. So, the entire thought process of buying a digital product and the experience that you're providing is completely changing. It's no longer this whole thing about, oh, I just want to come and do a payment and I want to kind of do my state. Those things are gone. Today, the thought process, the way the banks have to think digital is going to be the experience I'm talking about. It's very different. Like he mentioned, take an example like a Kakao Bank in South Korea. It's one of the most scaled up banks, digital banks. You can put your emoji logo practically on every digital asset that you want to build for the bank. That's the level of personalization they're going to. So the experience part, and you just touched upon the experience part, and I'll come into a little bit more difference. And that doesn't mean that all of us have to only look at this segment, because India is, again, multiple countries. So our digital experience strategy will be very different, okay? And we'll probably dwell upon it as we go along. And I see, especially with the advent of AI coming in, again, the form factors are changing, like the way he mentioned, because visualization is not the only form factor. Tomorrow's bank apps could be a voice, could be actually a kind of just a type. And just imagine the free text typing. What kind of experience are going to give on that? So it's a whole lot of a new game and it could be completely non-English driven. So really, the visualization game and the experience game, both from a UI UX aspects and touch and feel aspects, are changing dramatically. And the banks of tomorrow are the ones who can find these pockets of experiences, curate them, and then kind of drive the strategy. And it can be different for different banks, actually. So that's where, at least I'm seeing this going.
So, I'm actually very delighted because I sort of hear resonance. And if you look at what HDFC Bank and Airtel Payments Bank are doing together, it's actually the thesis globally, which is that digital banks and universal banks are complementary in a consumer's pocket. A consumer globally has a universal bank account, which he chooses for a large proportion of his money, and a digital bank account for various cut, precise needs. And let me give this powerful insight. Ultimately, the banking industry is moving towards a point where the need or the psychographic is going to drive purchase. The biggest driver of purchase today, at least for the payment bank industry and for Airtel Payment Bank, is that consumers in cities are terribly aware and scared of the fact that the main bank account needs to be protected from digital frauds, which is a 2,000 crore a month industry. What the consumer is doing, it doesn't matter how much money is there in the main bank account. It could be 50,000 rupees, it could be 25,000, it could be 5 lakhs. But he wishes or she wishes to insulate his main bank account by actually choosing a safe second account, which, by the way, a Airtel Payment Bank account is the most natural choice, and therefore the payment bank has become India's #1 choice for a safe second account. So I actually really love the point which you made. Differentiation, similar to consumer goods industries, is really going to become the mainstay of banking, as is true for all of the bankers here in this room. The real dream to become consumer good marketeers as opposed to main plumbing bankers at the end of the day.
Thanks for the insight. So there is a whole debate going on between the mobile-first approach and the omni-channel approach. For a bank like HDFC, where do you see the strengths in integrating the physical and the digital experience together?
Like I think Anubrata dwelled upon it, and there is a little bit of a divergence there from a bank strategy perspective, because we do believe that that there is still enough to be done from a physical distribution perspective. Just like the security on the mobile app is as critical, and it's very seminal today, given where we are sitting, the kind of frauds that we are seeing. But I also think that the fact that there is a brand on next door neighborhood gives you a sense of trust and a sense of experience. I don't think the physical bank is going anywhere. If at all, in fact, and we are a very regulated economy. Let's be honest about it. I know models like Brazil have scaled up big time, but I think we have a slightly different path to take from getting out of completely physical, because India is still very assisted. I mean, just look at a family member today. I mean, when does a grandfather look at a bank account opens up or he has to use a mobile app, he will go to a granddaughter actually or a grandson. You go to an ATM security, the first time somebody puts an ATM card is looking at a security guard to help. So this is a different India, like I mentioned, while we have these Gen Zs and the experiences and all of that will happen. The physical distribution is changing, and that's why the nature of delivery in those physical distribution is going to be dramatically changing. What I mean by that is that you cannot have 30 people branch, 10 people branch. You can't have manually being driven processes. In fact, if at all, these will be centers of engagement because a lot of the work that's already got digitized. I mean, today you walk into our branch, practically you don't have to do anything physically. But the senior citizen still wants to come. Like you said, I might be very happy to educate him on cyber fraud. That should be my job actually. And that conversation can take you to a very different family account thought process, right? How do you get more from him? But the conversations and the digital aspect of delivery into these branches, again, all branches have been using MPLS lines, 2 MPLSs, 2 switches, 2 routers, 10 terminals for all kind of insurance property. Today, you could just go and plug 2 laptops and make it as a branch here, within 2 hours with probably one-fifth of the cost. So I think that physical branch thought process, again, is going to be dramatically different. It's going to be very digitally enabled. I mean, look at what AI assistants would do in the branch. If you can identify the people, you can converse. CDMs, cash depository machines, check deposit machines, all of this is fact today. I think as we go along, I think it will be very digitally delivered physical bank, very thinly staffed, very smart looking, but at the same time, it allows that neighborhood comfort to come saying, if at all I need a human face. A lot of us don't like just hearing the IVR voice all the time, right? I mean, a lot of us today don't expect, even in India, for example, Amazon has to still give a phone number, right? I mean, come what may. In fact, we tried a lot with our PayZap app saying, should we just get the person not come into the branch? But there are times when he wants to do it. So I think the physical touch will still be there, but the nature and the delivery of that will be very distinctly different, Okay,
thanks. Now, basically Airtel Payments Bank being a pure mobile-first digital bank, how do you compete to keep yourself relevant in terms of speed, reachability, UI, UX experience? How do you do that?
I think, look, I touched upon the experience thesis, and I think Ramesh has pointed out the fact that what HDFC and what he's really trying to deliver is an omni-channel experience where the physical touch. Of course, he's trying to deliver it in a very light way, but nevertheless, the physical touch is important. We have a very large rural business where we deliver, a staggering amount of physical access. But that's for a different day. The real deal for the digital bank to be delivered at scale is first we must, to deliver the principle of complementarity, really have a clear economic thesis, which is that the consumer in India will have a main account with a universal bank, will need a very low cost secondary account delivered at a compelling price point for which your cost to serve or cost to deliver must be equally compelling. And that has 3 core principles. First, eliminate all branches completely because that is 75 to 80% of all your retail service delivery costs. Second, leverage fully the wonderful digital public infrastructure which has been delivered by India. We use every single digital infrastructure asset built by India, including eKYC, UPI, so on and so forth. And third, really build scale to a level where today we have 100 million users using us monthly so that the cost per serve per transaction really drops. So I'm quite happy to share that actually our cost per user per month is actually not even in dollars, it's in cents. We are able to therefore deliver a very compelling price point for a second account, which is that for the user, he is able to open an account in 3 minutes at 0 balance at India's best value point which is 200 rupees a year flat rate. And that is what makes it finally compelling for him to use it and use it as a layer of protection for his main bank account. We process over 1 billion transactions a month, aggregated centrally, data is federated, and then of course we use all the bells and whistles, AI, so on and so forth, which we can talk through as we go through in the discussion.
So I was going to touch upon this next. Both of your banks are very highly technology-driven banks. You collect a lot of data. You must be processing a lot of data. How do you use AI, automation, data analytics, all of these to improve the overall digital banking experience of penetrating it further?
Yeah, I think AI has become, I think, a hype of unproportioned, order. I'm not saying hype from a negative. I think there's a lot of potential, but I do see a lot of people just adding AI for the heck of it. I think we fundamentally have to look at it, and AI is not it's not new. Banks have been using it for probably 25 years now, 30 years. As I see with the credit decisioning. Fine, they may not be Python models, but we learned SPSS, we learned a lot of programming. MATLAB we did, okay, much earlier. So I think fundamentally AI has been there. It's just the manifestation and the computes around it have differently changed the game. And the way we see is that a lot of the AI, the left side of the brain work, which is basically logical work, which is credit decisioning, risk management, stress testing around risk areas, all of that will be driven by AI. They'll continue with fraud, detection. They'll be driven by classical AI. The nature of that is changing dramatically. I'll tell you why. And people have just not focused. Everybody's just running to LLMs, Gen AI. Take money mule today. It's a very, very fundamental problem in India today. But the problem with money mule is that, just to give you a little background today, a money mule happens within a period of about roughly 45 minutes. That's all that's available to you to stop a money mule. 45 minutes of window. Either you've stopped at the acquisition, but it's very difficult to stop at the acquisition. I mean, you do everything, you're doing that, but the kind of social engineering that's happening in India today on money mule is remarkable. I mean, you will get a job letter, and your bank account will be taken over for months together. You would not know, and then suddenly one day it'll be off. Actually, it will become completely used for money mule. But in that 45-minute period, you're going to see thousands of debits and credits and a very small number of debits that go out. How do you look at that data of aggregate in a very small period and stop a money mule using a machine learning? Now, the problem is that banks are still on T+1 on data warehouses. So the entire game has changed. Today's Python models have to run on real-time streaming platforms. I mean, you have to use something like a Flink or a real-time database that's kind of very, very different in its time series databases that can catch these aggregates. So the usage of the machine learning itself is changing on the classical side. On the Gen AI side, I think it's very early days, but I think fundamentally Gen AI, first of all, banks have to be careful. For example, we've been doing a lot of work there. We've been building our own platform in Gurgaon. We call it as Neve, actually. It's a complete orchestration platform that we built over the last 8 months. You deploy your LLMs, you do your MCPs, you put your agents, all of that stuff we have kind of built on our own. But I think what is really fundamentally different is the evaluation frameworks that are putting in, because we don't want thousands of use cases and suddenly you're trying to pull back because you don't know which of these use cases have hallucinated where or created a bias issue. And this can happen actually. So really getting the AI infrastructure and the AI framework is important. And secondly, what we've done, we also try to avoid duplication. So for example, we look at extraction. So we're doing a lot of Gen AI cases on extraction. So a trade extraction that is coming in line and extraction of a contract of housing loan and an Aadhaar extraction or a salary statement extraction is an extraction. You don't need different machine LLMs behind that capability. Yeah, your ragging can be a little bit more, zoned in that sense, but it's exactly the same capability. So we said first we'll build platform, then we'll build capabilities, whether it's extraction, search is a capability, but search with complaints and all the queries on top of it becomes more intelligent search actually. That becomes a capability. Then you have things like, coding, you have things like voice to text, text to speech. A collection call can go from the same LLM. An incoming, request on customer service can also be serviced by the same voice to text, text to speech. So then we build the capability layer, and then we decided to put the use cases. So we run a very important program called Lighthouse program. It's pretty much in the news actually. But we're focusing on 5 or 6 of this right now. We've done about 3 of them right now as we go along. 2 of them are in production already. And all of them have a human in the touch right now. None of them are exposed to the customer directly. In fact, if you go to our booth down, you'll see a AI skin actually on a mobile, but we're not exposed to it. Because very clear, we want to be sure that it's working 100% right with all the guardrails actually. So I think it's early days, but I think banks will have to think through their own GenAI strategy, which is very, very, very unique to their DNA. And it has to be very control-driven thought process. Otherwise, you will have regulatory issues, so to say.
I think he's covered it very well. I'll just flip this around. Obviously, we have the same challenges, and data federation is extremely important. We've built the same layers. Machine learning models are in place for money mules, so on and so forth. I think the broader question which you really sort of asked is, I talked about how we are using technology to really drive down costs, so on and so forth. I'll give you one very nice little story which has been, and I realize I'm flipping the story completely, but I wanted to share it. Sometime over the last 5-6 years, we realized one very interesting statistic. We'd built this platform, purely centralized, tech-driven. We power 500,000 business correspondents all over India. By the way, it's the largest banking network in the world. The closest banking network is Vodafone M-Pesa in Africa, which is give or take 350,000 banking points. And we suddenly realized 1/3 of our accounts were getting opened by women. This was sometime in 2022, 2023. And we realized what's happening. And then we realized, as you dug into the data deep, we realized that these consumers were actually women who had purchased a smartphone roughly 12 months back. And they suddenly started saying, look, I don't want a bank account with my family or with my husband. I want a bank account separate, only in my name, because I want the government benefits coming straight in my name. So given the sort of data architecture which we built, we were able to observe actually the winds of social change blowing in India right in front of us. And that was the power of actually platforms getting built and us being able to observe network effects playing out as platforms get built with scale over time, just as it is happening with the Safe Second account in cities with Airtel Payment Bank. That's a limited point which I want to build. While we build AI, while we build machine learning models at the back, ultimately what it means to consumers in the front is what will really decide where the battle is won or lost.
Since we're talking of adding the next 1 billion customers, for both of your banks, is it going to be a scale fast approach or a scale patiently, with responsibility kind of an approach? What's the kind of approach both of your banks take?
I think I'll take a shot at it, but I think it will be the latter to my mind actually. See, the scale is, we've kind of scaled today. I mean, the bank has more than 11 crore customers, so that's like 1/10 of the, and if you have to multiply from a bankable population, I think we are 15-16% from that perspective, I think. But that doesn't mean anything because the number of people who are coming into the banking is also equally huge. Okay, so it's like a kind of an effect that comes through. I think India would be unique. If you ask me, you will have banks which will be able to ride the scale and do it responsibly. Frankly, that's what the game is going to be. If you're going to be sitting on either side, I'm not so sure whether you need scale in banking. Otherwise, it's going to be difficult. I mean, as we see more and more, like he said, the unit price is going to drop, and then the credit costs will come into picture. We're seeing that the cycles of play out, especially when you're getting more and more down to the unsecured segments. So I don't think we have a choice between the two. If you ask me, I think practically, and that's why I think the digitization, the DPI, the AI/ML, all of that parts will allow you to scale responsibly, so to say. And that's the beauty of digital bank, to my mind, actually. And the future of the digital bank will hinge on that, actually.
I think our simple thought process is we are not really bothered about answering the question. We are bothered about getting the platform right. And let me answer this in 2-3 data points. First, we actually didn't have an ability for our consumers to set up a UPI execution mandate even 18 months back. The moment you are able to set that up, today we are the 4th largest bank in India in terms of UPI auto executions. Today we are the 3rd largest mobile bank, which is consumers accessing the bank through their mobile phones. It's State Bank of India, HDFC Bank, and Airtel Payments Bank. The simple answer is the moment you get the platform right, which means responsibility, which means getting it accurate, there's enough scale out there, a 60-70 million opportunity of safe second account users, 100 million rural account users who will just rapidly onboard and get the scale.
Since we're short on time, I'll just move to the final few questions. From a future outlook perspective, how do you see the digital banking landscape changing in India over the next 5 years? And also, what would be your advice to people who want to build digital banks, which are trusted, profitable kind of banks?
I think we covered that. I think tomorrow's banking, like I said, it's not going to be one fit all solution. Like you said, you will find sweet spots. You will have to segment it dramatically. I do think that non-English banking is a very, very key aspect. I truly believe that, because there is a language barrier. We can keep talking about it, but somewhere along the line, especially from an engagement perspective, not so much from a transaction perspective, but I think from an engagement perspective, it's one of the things that we see, at least I see it as a very, very clearly a thing that's going to kind of play out. Definitely AI will be very, very instrumental the way we are going, at the scale at which we are going. Gen AI will definitely come into the picture, especially when you're looking at new capabilities. I also see Gen AI as being a driver to get out of the legacy trap for a lot of banks, actually, if they do it, and the fintechs actually that are riding on that. DPI rails, very clearly digital public infrastructure is the third, and as we keep building new ones, whether it's ULI, whether it's CBDC, we will kind of continue to see other Section 8 companies coming in and kind of riding on the DPI. DPIP is the new one. A lot of these account aggregators are already matured, but I think we'll keep seeing this stack kind of growing. So I think if you look at the combination of these 3-4 things, the tomorrow's digital banks and it will be a lot of fintechs. I think startups will have a tremendous time, actually. If somebody is kind of out here wanting to work with the banking industry or the fintech industry, it is the right time, because the amount of openness that we have created in the architecture, I think that's fundamentally going to kind of help. So I think it's an amalgamation of the fact that banks themselves have to morph themselves into technology companies, aided by a lot of fintechs and startups, driven by DPI, infrastructure, and then emergence of new technologies. I'm not even getting into blockchain. I'm not talking about quantum and all. Just the fact that the Gen AI and the AI will be industrialized at scale. If you look at these are 4 or 5 recipes that are going to drive the banking of tomorrow, actually.
One short line, and I'm going to be provocative here. 7 billion people, the master of ceremonies, I think, mentioned 1.4 billion people who are underbanked globally. The real deal is that we are actually in the midst of the largest public policy experiment in the world today. something unique is happening which has never happened in human history, and it's unfolding right in front of our eyes. The combination of what Ramesh pointed out of digital public policy, the combination of the public infrastructure which is happening right in front of us is really going to be unfolding, and really it's up to us to imagine, and we are going to be limited really by our ability to imagine what may be.
Thanks both of you for the insights. Any questions from the audience? So we don't have any time for questions. Thanks a lot.
Volume here. Ladies and gentlemen, let's put our hands together for our panelists and our moderator for so sensibly navigating through all of the questions. Thank you so much. I request all three of you to please come forward for a photo op. And I do understand that I've had to cut short your Q&A. I'm sure that you have questions, and I would request you to take them informally with our panelists.